Welcome back to Market Fatafat, and let's keep it going with all the buzzing counters. But before that, let me welcome on the technical front Mr. Ashish Kyal, who is the founder and CEO of Wave Strategy Advisors, is joining us right now. Hi, a very good afternoon, Ashish. And let's talk about your first counter then, and that is Aurobindo Pharma. Indeed, the pharma is in the pink of health today. But look at the move in Aurobindo Pharma hitting an all-time high. The numbers were decent. The management commentary was also on the positive side. But why such move today? And like, is it backed by the volumes as well? How are you seeing it on the charts?
Yes, the overall trend for Auro Pharma has been positive. We can clearly see that on the charts also. And the stock is outperforming today when we can see Nifty is down by nearly 170 points. The stock is up by more than 3.5%. So the overall trend for the pharma stocks is positive, and Auro Pharma is outperforming for quite many months now. We can expect the trend to continue towards the level of around 1750 on the upside, and on the downside, one can maintain a stop loss for the stocks around 1460 level.
We'll do that, but I just want to take a quick check at the market. I know it's too soon, but too much of a fall has come in the last 5-10 minutes as well that we're seeing for the market. 24,170 levels is what the Nifty is at right now. Yes, a fall of around 0.7% from the day's highest point, 186% fall that we're seeing. And among the top losers that we have in the Nifty 50 today, let's pull that up. Shriram Finance, BPCL, HDFC Life, HDFC Bank, among the ones that are seeing a fall of more than around 2% in a trade. Also, in terms of just the last one, the fall that came in for some of the stocks that was in Shriram Finance, that was a fall that came in as well. Power Grid and Nestle, slight bit of a pressure on that too. So yes, keeping an eye out on all these stocks. As of now, Nifty a bit under pressure. But let's move on and talk about the next stock that we are highlighting right now, and that is Olectra Greentech. We have a great set of numbers that was reported by Olectra Greentech. The stock was buzzing in trade, holding on to strong gains. Revenue up by 45.3% on a year-on-year basis. Profits of the company seeing a growth of around 34%, while in terms of the operational performance, that's been good because EBITDA was up by 4.4%. Margin seeing a slight bit of a decline there, though. But all in all, decent numbers that came in. Olectra Greentech holding on to gains of almost 9%, and despite the subduedness in market, weakness in market that we're seeing, the stock has managed to hold on. So that's interesting to watch out for that, Ashish.
All right, but sticking with the earnings then, let's have a look at Easy Trip, because the flashes are on the bottom of the screen and it seems like a decent set as we continue to talk about the travel and tourism theme. This time, Easy Trip has seen a jump of 23% on the overall revenues. EBITDA has grown by 35%, as well as the profit margin, EBITDA margin rather, has seen a jump of more than 200 basis points, and 30.8% is what the company has reported, with a net profit growing by 25% on a YOY basis. So indeed, a good set of numbers coming in from Easy Trip this time, and the stock is also holding on to the gains of 2% right now.
Surely keeping an eye out on that one, but let's move on. And Ashish, Dixon Tech, there's no stopping this, right? Because it's just seen this run away, up and away. Today, as of now, trading at 12,000 rupees approximately per share. What's the word now on Dixon Tech? Should anyone even look at booking profits or continue to hold this?
See, Dixon Tech has continued to outperform the broader markets and IT stocks. We can see some consolidation happening, but Dixon looks to be forming a triangle pattern, and there is a possibility that the stock can break out this pattern and can reach towards the level of around 13,500 on the upside. That's the target for Dixon. 13,500 is what we can expect, and on the downside, one can maintain a stop loss of around 20 days average, which is around 11,600 levels.
All right, then that's about Dixon Technologies. But with this, viewers, as you can see on the bottom of the screen, it's Hindalco numbers. We will address that in a while. But before that, viewers, let's have a look at the smart meter space, because all these counters, be Genius Power, HPL Electric, Cairns, they are all buzzing in trade. But what's the buzz in the smart meter space? Sharad is standing by to decode all of that for us.
Well, yes, smart meter themed stocks are in focus, such as Genius Power, HPL Electric, and even Salder Electronics. These stocks have been buzzing in trade. Now, industry buzz is that larger state government orders is expected to come in over the coming months. And interestingly, yesterday, Andhra Pradesh government launched a prepaid meters coming in the government offices. Apart from the institutional orders, expectations from the state government, the smart meter program is expected to enable almost 1.5 lakh crore investment in the prepaid smart meter segment, and overall the target for 2025 is almost to make the smart meters come in 25 crore homes in order to replace them from the traditional meters. Now there are two players largely involved, first one being Genius Power and HPL Electric. Over there, their order books ranges between 3,700 crore to 21,500 crore rupees, but the valuations for both the side is on the expensive. Apart from this, conglomerates such as Tata Power, Adani Group and GMR also have exposure in the smart meter via their arms or wholly owned subsidiaries. Interestingly, the smart meter, the industry size as per MOCL, it's ranging between 48,000 to 60,000 crore rupees, and as per National Grid mission statement, only 1.3 crore households have actually installed these smart meters, and of course the runway itself is 25 crore, and of course this is coming in for the next 2 years. Also, there are certain risks involved in the smart meter theme, the first one being of course the slower execution for the implementation of the smart meters, also higher charges, as some corners have reported that the charging has gone up, and that is something to watch out for, and of course the elevated valuation which I had actually pointed out. Now today itself we had done our cover segment also, where Kaien's technology was in focus, where the cover in the street is that their smart meter manufacturing facility in Telangana is expected to start their operation in a month.
Thanks so much for that, Sharad, keeping an eye out on that. But let's quickly mark the flashes at the bottom of your screen. Hindalco came out with its numbers. Revenue, a slight bit of a miss compared to what we were expecting. We were expecting 23,900. It's coming at around 22,155. Profits in line with what we were expecting. So yes, profit has managed to see a growth this time of around 4.1%. Profits at 1,470 crores. We're comparing on a quarter-on-quarter basis, keeping an eye out on that. Margins, slight below what we were expecting at ET now. 11% approximately is what the, I think, sorry, yes, 11.5 was the expectation, so it's above estimate, sorry. So yes, EBITDA margins above estimates because it's come in at 12.4%. The factors that come into play for Hindalco is in terms of aluminum prices that had seen a sharp rise this time. So yes, because of that, maybe some bit of an improvement there, that what we were watching out for. But revenue is something that clearly saw a miss this time, and we'll be keeping an eye out on that. Revenues came in at 22,155, very stable versus, flattish we're seeing in terms of a move versus last quarter. So keep an eye on that. We'll wait out for some bit of a commentary or anything that comes in later on. But as of now, seems like Hindalco is an inline set of numbers. And if we could just see how the stock is moving as well. As of now, the stock is down 1% in trade, a slight bit of a decline that furthermore has come in after the numbers were reported. So yes, that's Hindalco in focus today. Inline set of numbers reported from this Nifty company, Shrishti.
All right, that's about Hindalco. We'll wait by to see some bit of a management commentary in a short while from now, but no significant reaction on the stock price. But with this, let's get back to all the other buzzing counters then, and let's focus to Yatra, another counter which did report its numbers, and this time it has been lackluster performance by Yatra, because look at the margins that has now seen to 4.5%, as well as EBITDA has also seen a decline of over 70% on a YY basis. The net profit also saw a decline of 30%, as well as revenue also were down 8% on a YY basis. Across all the parameters, we are seeing Yatra Online not performing well in this particular earnings, and that's why the stock is also down by 4% and no significant recovery from the day's lowest point as well.
Okay, surely that's Yatra Online for y'all. Let's move on, Snehi. The next stock that you've picked out for us is Inox Wind. Why is this in focus?
Well, Vinny, if you remember, Inox Wind is a stock that has been doing phenomenally well for itself over the past couple of trading sessions. First of all, Inox Wind and Inox Wind Energy both reported a stellar set of numbers, tipping over to the profit side compared to incurring a net loss this time last year. So ever since the street has picked that up, that momentum seems to be continuing, and even today the stock is doing pretty well, up 6%, but today it's on the back of an order win. Now Inox Wind Limited has announced that it has bagged an order for 51 megawatts from the Ever Renew Energy Private Limited, which is a CNI player, and this is an equipment supply order for Inox Wind's latest 3 megawatt wind turbine generators. Now additionally, Inox Wind will provide post-commissioning multi-year operation and maintenance services. It's stated in a filing, and the project will be executed in Tamil Nadu. So on the back of this order win, this rally that Inox Wind has seen in the market continues, and up 6% is where the stock is. But well, yes, we also interacted with Devan Jain, ED at Inox TFL Group. He believes that the EV chemical business is a multi-billion-dollar play and will be the biggest gorilla in the Inox GFL group. Let's go across and listen into a slice of that conversation, and stay tuned for the full episode as well.
The biggest bet for us now is GFCL EV, where we are setting up a mega battery chemical complex. These are global scale, very, very complex businesses, very strong moats. I personally believe that's probably going to be larger than anything else we've done in the group. That's still work in progress. A lot of action which we've done on the ground over the past 2 years. We've not spoken much about it, and wouldn't be fair for me to talk too much about it, but I think that's going to be the biggest gorilla.
So give me a sense of how the EV business, EV chemicals, how much revenue size can it achieve in the next 5-7 years? You started talking a little bit about it at the management level in the conference calls, but I want to understand the potential there.
Look, it's going to be a multi-billion-dollar play for us. In terms of revenue, in terms of profitability, I think the group is known to maintain very high profit margins. From a GFL perspective also, every time we evaluate businesses, we're looking at certain numbers below which we don't work. And I would not be able to throw too much light on it, but I think EV is going to be the biggest bet.
But I'm told that a lot of global investors have started approaching you, and for some pie in that end alone. And I think the management has indicated that at right time, value unlocking or getting strategic partners, perhaps financial partners or strategic, which one would you prefer?
Look, I don't think it's strategic partners. We've got the technology tie-ups in place. We have a very large R&D team, both in India and globally, thanks to our fluoropolymer business experience. It's not really right to say a financial partner, but it's really going to be financial investors who'll probably get a small piece of the pie. As we are known to list all our companies eventually, I would assume the eventual goal would be to list all our larger ventures. And to that extent, while we will raise some capital in EV, eventually.
So will that business also be carved out and listed separately at some point in time?
I would tend to believe so. Of course, the board of directors needs to decide that, but obviously the group thinking is that eventually it would be listed.
All right, then talking about the earnings, then just a while back we did address the numbers for Hindalco, which were a bit of a mixed set, but the management commentary seemed to be on the positive side, because the management did say that looking ahead, the major capital formation phase of their downstream business is near completion, and going ahead they will explore growth opportunities in their upstream business given their strong cash position. Other than that, some of the operational updates also coming in from Hindalco, where they do say that the aluminium upstream EBITDA has seen a jump of 81% on a YOY basis. That's industry beat EBITDA margins at 40%, as well as that's been an all-time high quarterly copper EBITDA performance as well, with a jump of 52% on a YOY basis. So Hindalco, mixed set of earnings versus the street estimates, but the management commentaries seem to be on the positive side, so do watch out for that.
Surely we'll keep an eye out on Hindalco, but let's move on. And TVS Motors on the technicals. Ashish, what's the word on this one?
TVS Motors has been in a very strong uptrend. We can clearly see within the two-wheeler space, the stock has outperformed, and it has also managed to break out today, bucking the trend. When the majority of the market is falling, the stock is moving up. So overall relative outperformance is what we can see. The stock can move towards the level of 2,800 on the upside, and one can maintain a stop loss of around 2,570.
Okay, keep an eye out on those levels over there. Let's move on and talk about Camlin Fine Sciences. That stock is under pressure after its numbers. We saw a decline in terms of revenue of around 6%. The company actually went into a loss this time and reported a loss of 35 crores versus last year it was a profit of 12 crores. And in terms of operational performance also, we are seeing the weakness. So yes, like other chemical companies, we're seeing pressure on this one as well. EBITDA margins down by around 464 basis point. EBITDA also on an absolute basis is down by 53%. So yes, keep an eye out on this one. As of now, Camlin Fine trading at the day's lowest point, 5.6% downtick for this one.
All right, then moving on and let's focus to IGL. And Ashish, how are you tracking this particular stock? All these city gas distribution companies have been a bit range bound in the recent while, but what exactly are you spotting for IGL?
Yes, these companies are in range bound, but we can see IGL formed a very important low at 512 and showed a smart recovery from there. Post that, it is consolidating in a flat pattern, and the possibility is that it can give a positive breakout on the upside. We can expect IGL to move towards the level of around 565. That can be the target on the upside, and one can maintain a stop loss of around 528 levels.
All right, that's about IGL, but let's shift focus to TARC, then one of the companies that did report its earnings, and this time what we have seen for the company is a decent set of numbers. The revenue, though it was down about 8% in trade, as well as the net loss is being reported by the company. This time the net loss is at 31 crores, and EBITDA was also seen to be under pressure. So not a great set by TARC, the stock under pressure.
Yes, 7% decline in terms of revenue, clearly causing some bit of a pressure there. Ashish, Crompton, that's the next stock that you've picked out for us. What's the word on Crompton in terms of a stock move that we should be expecting? Right now, Crompton is trading at 435 rupees per share. Last 6 months, we have seen a bit of a move coming in, 52% uptick there. Are we expecting a further upside?
Yes, it looks like Crompton, after a very strong run-up, has been consolidating, and the overall trend looks to be bullish. On the downside, the support for the stock is around 413 levels, from where it bounced back sharply. There is possibility over short term we can see some consolidation, but it should eventually give a breakout on the upside towards 470 levels. So the target for Crompton can be maintained for 470 levels.
All right, that's about Crompton, but moving on, Snehi, let's talk about Honasa. The brokerages are now turning positive on this particular stock. Tell us more on that front.
Well, yes, absolutely. We have a note from Goldman Sachs that came in today on Honasa Consumer, and they've initiated a buy rating with a target price of 570 rupees. They believe that the India beauty transformation creates a multi-year growth opportunity, and combined revenue of the 5 leading new beauty companies, including Honasa and Minimalist, grew exponentially 28 times over FY19 to 23. They say they see scaling up of the portfolio of brands under the Derma skincare stable, and they also see growth opportunity as Honasa doubles its offline distribution to 400,000 retail outlets or 4 lakh retail outlets through FY27. They expect EBITDA margins to increase from 7.1% in FY24 to 10.2% in FY27 and further 14% in FY30. So quite the visibility being seen there, and they're also saying that they see the new brands scale up and turn profitable as well. So positive note coming in from Goldman Sachs on Honasa Consumer, and the stock is up more than 3% in today's trade.
Surely keeping an eye on that one in trade. Let's move on and talk about Siemens India. That's the one in focus as well. Last 6 months, Ashish, we've seen a good return, right? From around below that 5,000 level today, trading almost near 7,000 mark is what Siemens is doing. Are we expecting the upside, or maybe a sub bit of a consolidation is what one could watch out for?
Yes, Siemens has shown a very smart move on the upside. We can clearly see that. And recently, you can see on the charts, it has formed a double bottom kind of a pattern. The breakout of the same will come above the level of 7,150. So we can expect a further up move from here in Siemens, maybe post some consolidation, but the uptrend can resume in this stock, and we can expect it to reach towards the level of 7,800 on the upside.
All right, moving on, let's focus to ONGC. So the stock becomes very volatile and has a great correlation with the prices of the crude oil in the global markets. But back home, the brokerages are now seen to be turning bullish on this particular stock, because Jefferies did come out with its note where they do maintain a buy rating, raise the target price to 420 rupees. What the company is saying that yesterday we did see an announcement coming in from ONGC where the company was seen to be announced that there will be a premium price for the incremental APM gas product that has been notified. This would apply at 10% of their ONGC's current gas production, rising to 20 to 25% of the contribution in the production in the next 2 to 3 years. And Jefferies is also saying that incorporating the new pricing regime will lead to 2 to 3% increase in their FY26 and 27 consolidated EPS. The valuations remain favorable, and the stock is trading at a discount to Nifty. Nifty. And that's the take coming in of Jeffries on ONGC. But with the fall in the markets as well as the kind of run-up that we have already seen in ONGC yesterday, I believe that the stock is under pressure today on the back of these factors and down about 2% in trade right now.
Surely keeping an eye out on that one, but let's move on and talk about the next stock. And Ashish, the next stock that you've picked out for us is Federal Bank. What is the chart indicating now for Federal Bank, and where should we see it move from here on?
We can clearly see that there has been some selling pressure today in the overall banking space when the bank Nifty is down more than 600 points. But Federal Bank has still managed to be trading near the prior day's close and a little higher from there. So the overall tone is positive for Federal Bank. If we see some kind of a upside pullback in the broader market, I think Federal Bank should start outperforming after touching the 52-week high. And we can expect it to reach towards the level of 210 on the upside. And one can maintain the stop loss near the 20 days average, which is 197 on this stock.
All right, that's about Federal Bank once again reclaiming the levels of 200 rupees. But moving on to another news flow where the Ministry of Information and Broadcasting has withdrawn the latest draft of the Broadcasting Services Regulation Bill and decided to issue a fresh one after consulting stakeholders. Sumita is here with more details.
Yes, in fact, the government has said that it will hold further consultations and publish a fresh draft of the Broadcasting Services Regulation Bill after certain provisions of the previous draft raised concerns amongst online content creators as it allegedly sought to club them with OTT or digital news broadcasters. In fact, this draft was not released publicly, but the ministry was understood to have incorporated this provision, and hence there were concerns around free speech and how content creators should not be clubbed with the digital with news broadcasters. In fact, the provisions in the draft bill would have made mandatory for individual content creators to appoint a grievance redressal officer and content evaluation committee once they crossed a certain number of subscribers, leading to more focus on them. And of course, as there were concerns about free speech as well. Now, there were also industry stakeholders, media bodies as well that claimed that digital media organizations and civil society associations were not consulted on the move, and hence they asked for further consultation. But the government, in a latest tweet, has said that the previous a draft bill and explanatory notes were placed in public domain in November. They've also said that the bill is still in drafting stage and consultation with stakeholders is currently underway. It is also said that additional time will be given to stakeholders till October 15th, and a fresh draft hence will be published only after detailed consultations on this bill are done. Like I said, the bill seeks to regulate streaming platforms like Netflix, Amazon Prime, and Disney Hotstar as over-the-top or OTT broadcasting services.
So much for that, Sumita. But with that, we're absolutely out of time with this edition of Market Fatafat. So thank you so much, Ashish, Snehi, as well as Osho, for joining in with us. And it's a goodbye from Shrishti, myself, as well as the team who put this show together.